Let's connect with Omkar Tanksale, who's now joining in to give us his view on the entire IT sector and earnings. And let's just take forward from that point that Anisha was flagging off. An 18 to 20,000 crore rupee buyback is what the street is penciling in. What's the outlook on the overall acceptance ratio? How do you believe that the street is likely to read into the buyback announcement?
Yes, definitely. I mean, TCS is always announced in that particular range of 16,000 crores to 20,000 crores. So the major thinking of issuing the buyback or special dividend is like transferring 80% of the cash flows or to the investor side. So I believe it's more of attracting the investors to the company's performance. But I also believe that the company looks to be very confident in terms of going ahead, as backed by the strong deal wins, the demand that is coming up for the generative and newer technologies like machine learning and all across sectors. Yes, definitely there are some near-term challenges which likely to persist, but I believe it's long-term good bet. I believe it's more of a positive sign in terms of TCS, so market should react positively with the price. We are expecting around 4200, which is 15% with open market. They're going to buy, but see, one should be expecting how it's going to be.
All right, that's a view coming in on the overall share buyback. But the street is also going to watch out for a number of things in terms of the strategy transition under the new CEO. What is it that you're expecting by way of the overall headline number? Will it remain flat? And do you think that, a flat number would be preferred by the stock markets rather than a bigger disappointment this time around?
No, I don't think there will be a bigger disappointment because I believe TCS is more of an executioner and performs well of execution. We are expecting around 0.7% of the CC revenue growth and 1.5% of the growth in the rupee terms. We are expecting expansion of the margins by around 80 basis points at 24%. So we are expecting, because of the easing out of the salary wage hikes and the decrease of the on-site expenses and subcontracting costs. So that will be affecting positively on the TCS margin side. But overall, I mean, the revenue growth momentum is likely to be remain tepid and not going to be a stronger in terms of getting the momentum back on the track. The recovery will still likely to be there, and it will take some more time as than expected.
Omkar, how do you see the valuations? Purely the valuation call on TCS, say, compared to few others?
Yes, definitely. I mean, TCS has always been a premium. You know why? Because of the three reasons that the margins are exceptionally, because it grows with the volume. The return on equity is higher as compared to other peers of Infosys, and again, I mean, uh, the all in terms of all perspective, it grows with the volume. If you can also see, the TCS is having the highest margin, and secondly is with the Infosys, thirdly with the Tech, and fourth with the Wipro and TechM. That is the ratio. It grows with volume. So it's always having the better operating margins, return on equity, and return on capital employed. So its valuation is going to be premium. But I believe it's now it's been reduced from the upside levels, and if investor is looking from a long term perspective, then it is a safer bet to take a position along with for a longer run horizon.
Omkar, for us to say that, IT and in TCS in particular is safely out of the woods, I get some of the key monitorables are going to be very important from the management commentary and the numbers this time, right? And I'm just looking at your note itself. What they have to say about the client spend, especially in the BFSI vertical, I think that's going to be a very big signal. Pricing pressure on realizations, the rising subcontractor costs. What is your expectation at large about these monitorables and what the commentary is going to be around these?
I mean, definitely there will be a cautious commentary in terms of verticals. The VBS, I don't think, I mean, there will be a spending delays will be building on, and people started investing again back into the automation thing. I believe it's few for more quarters that one can see more of a cost optimization, and will likely to persist even for the next couple of quarters. But definitely we can see a recovery. In the last call of the management said that we have the month on month visibility on the sectors currently, which likely to be turning out to be positive side going ahead. H2 will be a comfortable. I mean, one can look at some part of the recovery. I'm not saying it will be a larger recovery or quicker recovery, but definitely there will be some recovery and some visibility. But definitely, I mean, one should see what is management is saying upon the client spend, especially from the North America, and that is from the BFSI vertical, because that is a major contributor to the top line.
Omkar, for joining in and sharing with us your analysis on the IT space. TCS laying low prior to its earnings, 36-37, and for the most part though, IT is holding out in the green, much like the rest of the market. We'll take